Welcome back. Let's talk to Alessio Rastani. He's the founder and CEO of leadingtrader.com. Alessio, very good morning to you. Right, market crash is my favourite subject.
This is something that's often ignored, the relationship between junk bonds and the stock market. Because we've actually seen, and this has been noted by a lot of research has shown that when junk bonds start falling, especially when they fall below their 21 average, the blue line I've drawn there at the top, they usually precede significant stock market drops.
Okay.
This has happened. I mean, if we had time, I would show you some previous examples. We don't have time right now, but here,
The important thing is this is a leading indicator,
it is indeed,
right?
yes.
So this is predicting a potential sell-off in the S&P 500.
That's right, it is. Whenever we've seen the junk bond market, and the symbol for that is HYG, so essentially corporate high-yield bonds, or we just call them junk bonds. Usually they start dropping, or they start falling significantly below the 21 average about a few weeks, sometimes a few months, but usually a few weeks before the stock market itself starts dropping. If we go back to that chart, and again, I showed our members examples of this back in 2015, 2016 that predicted those drops back then. So we can see the significant sell-off there on the junk bond market. And we've just made a pullback to the 21 just recently. But you can see the arrow, the blue arrow is showing where just a few weeks ago, about a couple of weeks ago, we fell below that average on the junk bond market. That also, just for folks who may not know this, that also is telling us that aversion to risk. People are leaving risk or stocks and going into more safety. So what does that mean? Well, if you just go back to that chart, guys, the stock market, we have to pay attention to the lows of last week after the fear came out about North Korea, all that kind of stuff, all the overblown fears that we talked about. So if we fall below the lows of last week on the stock market, I'll be worried, because that essentially would confirm what the junk bond market is.
Well, you'd have a lower high and a lower low there for a start,
Absolutely.
which is classic Dow theory, and your junk bonds, in theory, would be selling off, right?
Right, absolutely. Now, the question might be, why would the market sell off? What possible reason?
Invariably, at market tops, you don't know the reasons till after the event.
That's true, but something to keep an eye on, what the market's responding to that.
Alessio, as always, we've run out of time.
Thanks for having me.
Thank you.